This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
We're now going to look at the chapter on data, information, knowledge, and information technology. First of all, what is meant by the phrases or the terms data, information, and knowledge? And the first one we can look at is to see what is meant by data, and this is a raw fact. I could have collected data on the heights of everyone living in a town of, let's say, 1 million people, and I could simply be listed. And the data could be perfectly accurate, but in its current raw state, it's not very useful to me. It doesn't mean very much to me. It would be much more meaningful if maybe what I did was to analyze it into maybe average heights of men, average heights of women, or I said 10% of people are over a certain height, 10% of people are under a certain height, or I picked out everyone who was over 2 meters tall or something of that sort. That's when data is turned into information, data with meaning. So here we, in a business context, we could just have a list of all the invoices debited to sales ledger, all the cash coming in credited to the receivables ledger, a jumble of figures. But when it becomes meaningful is when it's sorted into the receivables for each person. Even more meaningful perhaps when we have an aged listings of receivables. We can then make judgments about the old ones that we are maybe worried about. So some sort of processing, some sort of presentation perhaps changes raw data into information. And in the early days, in the 1960s, the emphasis was on data processing. In the 1960s, when computing was first being brought into very large firms, it was called data processing, and it was the easy wins. It was like doing your wages and salaries. It was like doing the receivables, printing invoices and so on. Big number crunching applications. Once people were keeping double entry, if you like, going on in IT, then of course people very rapidly said, well, we can do other things with this. We can rapidly produce age listings. We can rapidly produce sales analyses and so on. And then it became, instead of data processing, it became information technology. And now what we're on to is knowledge management. And knowledge is quite a difficult term to define. It doesn't sound very scientific, but this will do. Information in somebody's mind, information in somebody's brain. So I could have, in the filing cabinet in the corner, I could have printouts of aged receivables. But of course, if they simply stay in the filing cabinet and I never look at them, I'm never going to do anything with them. I'm never going to be able to make use of it. And it's a realization that, one of the realizations is that when you get it into somebody's mind and they begin to think about it and make decisions, this is the ultimate gain, the ultimate aim of data. Becomes data information that's in somebody's brain. They're going to be doing something about it. The two important terms here. First of all, there is explicit knowledge. And you can think of explicit knowledge as basically knowledge that we know we have it. Usually this explicit knowledge is usually going to be written. Written down. I don't mean necessarily on bits of paper, but I mean, say, written in a computer file. Because once it's written, it's safe, but once it's written, it's searchable. You can put in keywords and search documents, search disks and so on there. It's easy to spread. It's easy for other people to use it. So this explicit knowledge is written down knowledge. Sometimes people say, we know it. We know we have it, and we can find it. By far the emphasis maybe at the moment is this tacit or silent knowledge, sometimes described as knowledge we don't know we have. Knowledge locked in somebody's head, which maybe even they are not aware of its importance. So, for example, take a salesman. We know that a salesman will know a lot about their customers, know a lot about maybe the personal preferences of customers, knows things like maybe the football teams they support, so you can get into a nice, easy kind of conversation with that customer before getting to the business at hand and would you want to place an order, really. And if this salesperson leaves, then of course they take with them a lot of knowledge about that customer and leave the organization with nothing. And it's not necessarily that the salesman is being kind of deliberately selfish about this knowledge. It's just something that you kind of take in conversation with people and you don't even know it's important. And one of the big challenges is trying to get this out of people. Another example, if I went to a recipe, I could bake a cake. So the recipe is explicit knowledge, so many grams of flour, so much sugar, so much eggs and so on there. I follow the instructions, I put it in the oven at 180 degrees for 25 minutes, whatever it says there. And if I bring out that cake, I can promise you it is so heavy, it begins attracting satellites going around. It's got its own gravitational field. I give the same recipe to my wife. She follows the recipe the same as I did, brings the cake out of the oven, and it is a lighter than air object. Why are my wife's cakes so much better than my cakes? We've both followed the same explicit knowledge, both followed the same recipe, but she obviously does something different, and she may not even know what that is. It may be simply that she works more quickly and doesn't stir it as much. Maybe that's what it is, but she doesn't necessarily know it, and I wouldn't know it. And how am I going to learn to be a good cake maker? Or in a business context, how am I going to learn to be a good salesperson if the existing good salesperson doesn't know the tricks of their trade, really, or doesn't know what they are? So, and if I ask my wife, how is it you make a good cake? She said, I don't really know. I just, follow what my mother did, and she followed what her grandmother did, and doesn't necessarily know the trick. So we have this challenge. How do you get knowledge out of people when they don't even know what the knowledge is that's going to be important? And if you don't get it out, then you can't do any of this. What you want to do, really, is you want to uncover the knowledge. You want to record it so that it's kept safe. You want to distribute it to other people so they can use it. Leverage is a form of distribution, but it's really using knowledge in one area, could also maybe have applicability in another area. So something you learn about the American market, you can maybe apply to the European market. And ultimately you want to update it. You don't want knowledge stuck in somebody's head, which is out of date. They haven't kept up to date maybe with new regulations. But if you don't get it out of somebody's head, you can do none of this. And as I say, it's very precarious for a company if they lose people with a lot of tacit knowledge. And this is about the only way, the only kind of little model which people talk about trying to uncover this knowledge. If you ask somebody direct, what's your secret, they may not know. So what you have to do first is really socialization. You have informal discussions with them. You maybe watch them, you maybe shadow them, okay? And you try to pick up, what is it they do that I do differently? Maybe by watching my wife make the cake, I see, well, she only spent 30 seconds stirring it, well, I spent 5 minutes. So this this socialization gets the knowledge out into the open. And then what you have to do is you have all these little kind of snippets of knowledge, so to speak. What maybe you do is to kind of write a handbook for the perfect salesman, the perfect approach. Don't go directly in and try to force orders on them, try to go in a little bit slowly and so on. Ask them how they got on with the existing products, if they've got any suggestions, the kind of soft soaping, really. So you've got all these little snippets of knowledge and you put them into like a handbook, a combination of how to be a good salesperson. And then what you need to do the salespeople need to internalize it. You don't want them going along with this little handbook and say, "Oh, customer says this, and that's on page 4. Yes, in response to that customer's behavior or complaint about a product, this is what I do." This has to become second nature. So this knowledge becomes internalized. So people use it automatically, and they, again, almost don't know why they're doing it. It becomes second nature. And then maybe again, after a while, you go around the cycle a little bit, see if any other tricks of the trade have been discovered. Now, what sort of processing systems are there? And just as we said earlier when we talked about data, some of the earliest processing systems were transaction processing systems, processing sales, processing purchases, processing timesheets, and so on. Every transaction. These were the early wins. These were the big number crunching, repetitive calculations, and that was really, I suppose, it really conquered pretty well in many large companies in the 1960s. As I said, very soon after that, once you had double entry going on, the transactions being entered into the system, we had information technology, and we had management information systems. In the 1970s, which produced information that could be of help to management, and indeed which the system could use, a computer could use, to make what's called structured decisions. A structured decision is a decision where there's a right answer, like, should I dispatch goods to this person if they're over their credit limit? Answer, no. And of course you can build these very yes-no decisions into a computer program. Sometimes structured decisions are called programmable decisions, and you can have kind of more automatic processing of orders. And then around the 1980s, we had decision support systems coming out, used for unstructured decisions that there isn't necessarily a correct answer. And it was really the beginning of the 1980s that the first spreadsheet was invented. I can remember seeing my first spreadsheet and was kind of amazed at what it would do. And a good example of a decision support system is a financial model. So you've got sales, costs, cash flows, and so on. And you can make different assumptions about the sales in every month. Maybe you change the selling price, that changes the volume, that changes the revenue, and so on. And you can kind of play around a little bit with the budget, the financial model, and you gradually get towards a solution. There is no right or wrong budget. There is no right or wrong selling price for a new product usually. You can't allow the computer to decide on next year's budget. It's simply not programmable. But you can give support to managers who are doing it. And a model on a spreadsheet is an excellent example. So the IT companies that sold people transaction processing systems, that sold them management information systems, that sold them decision support systems, they needed a new thing to sell them. And this is what they had here, the executive information system. Think of it as almost a marketing name. Think how you would want to be given an executive information system. Oh, I'm an executive. I don't just have an old DSS. I have an EIS. It appeals almost to vanity. More seriously, the distinction is, and whilst the decision support systems could be used, mid-height in the company, executive information system is going to be used at the kind of strategic level, the strategic decision makings. It has to be geared up. It has to have the right sort of access to information to make these high-level decisions. And usually the requirements are, as well as having internal information, you also need access to lots of external information. So say through the internet. You need to know what price your competitors are charging. You need to go and look at your competitors' website to see the sorts of goods they are producing. You may at that high level be thinking, should I open in Brazil? So suddenly you want economic data from Brazil. You want forecasts for what might be happening in that economy and so on. So as you get further up the company, gradually managers should become more outward looking. Right at the bottom of the company, you're probably beavering away, just doing your transaction processing the invoices and the clock cards and so on. At the top, you need to be looking out to make the strategic decisions. What's happening in the environment is what you need your IT system to help you with. Expert systems first began being talked about in the 1990s. Not as successful as people hoped. The idea was that you could uncover the decision-making process of an expert and program it. So there's some people who might be very good at predicting what exchange rates are going to be, or maybe what a share price is going to be. So you go to this analyst and you say, how is it you go about predicting what stock prices are going to be? And they say, well, I look at this, I look at that, I look at that. And you try to put that into an expert system. And they might say, well, look at the results, look at the economy, look at the budgets, look at what the chairman says and so on. But how on earth are you going to get that into a system? How are you going to get it to adapt, maybe, to the banking crisis quickly? How are you going to get it maybe to adapt if the structure of the EU changes, maybe a member leaves and so on? It's very difficult to keep these up to date, and also there's a lot of judgment in making a decision, many decisions anyway, which is really quite hard to capture, weighing up the risk and the effect of the risk on the share price. Is probably not static anyway. It's going to change almost every day. So expert systems tend to have only been used in making complex programmable decisions. So telling people what their state pension is, can be very complicated. It maybe depends on the year you were born, when you started working, what your average wages were, what your last wages were, how many years you started working, maybe depending on your dependents, so on, your health and so on. A lot of very complex kind of decisions set up by governments very often to determine what benefits or pensions are going to be. But the expert system can be programmed to do that, because at each stage there's a right or a wrong. Your age is this, therefore that. You've been working for 20 years, therefore that, and so on. But it hasn't really been much success in these more open-ended, non-programmable decisions. And finally, we have the idea of a database, a collection of data used for many purposes, great collection of information. This usually means that information is guarded quite quickly. All information is in one place. There's only one copy of it, so everyone sees the same up-to-date information and so on. It only has to be backed up in the one place. So databases are really the way to go. What sort of IT systems do we have? Well, very quickly, you've got standalone computers attached to nothing. In businesses, most computers were then networked. You have maybe a local area network. This is where you put special cables around the business, around the university campus, and say something like an Ethernet cable. And it means that people can share information. Everyone can see the sales, the figures for the month. Everyone sees the receivables and so on, the inventory. You can send email messages easily to each other. And nearly all, even small businesses, are going to be networked for this great sharing. If you've got two branches in different towns, then you can't obviously put your own special cable between them very easily. You'll use what's called wide area networks, using the normal telecommunications networks, and then probably a local area network, 5 computers networked in this town, 5 computers networked in this town, and in between they are joined up by the telephone company, just over a commercial line. And then there is a virtual private network. This allows people on their computer at home essentially to dial into maybe their network at work, and as though they then became part of it. It's private, it's virtual, because nevertheless information is going over the public telephone system, but by the use of security protocols and so on, it's essentially operating as a private network, but it can be very, very dispersed indeed. Allows great flexibility in working, particularly for people like salespeople on the road a lot. They can always dial in, update stuff, see news and so on in complete security. We need, if we're going to be doing virtual private networks, we need to know that the person dialing in is the right person. You need to have what's called access control and authentication. You need to, which could be passwords. You need to make sure that the information can't be intercepted over the telephone line. So you need this confidentiality, and quite often that is going to be done by some sort of encryption. You mix up the information before it's sent, and it's decrypted at the other end. So even if it is interfered with, it doesn't mean anything to anybody. And then data integrity, to make sure that the data hasn't been changed or distorted in some way through its transmission. And again, there are technical ways of detecting whether or not the information has been changed. But we need both of those to make sure that the virtual private network is adequately secured. Centralized and decentralized systems. In a centralized system, you have got one powerful computer, and then coming out from that, linked to it, you have a series of sometimes almost dummy terminals, computers which don't really do very much at all, and all the records are held centrally. In many ways, all the processing might be actually done on the central computer. All you're doing is acting as a kind of input-output outpost there. Great thing about a centralized system is security. All the information is in one place. There's only one place to kind of enforce backups and make sure the virus software is working, and so on, antivirus software is working. The data is all going to be the same. Everyone's seeing the same central repository of data. It can be relatively low cost. One large computer tends to be cheaper than 3 smaller ones. And you can have one expert in a way who's going to be looking after it. And the one powerful computer could do fairly efficiently processing tasks which require a lot of processing power. Whereas if it was kind of spread over a number of small computers, it might take too long to do the processing. There are, however, certain disadvantages in adopting a centralized approach here. And one is that if the central computer breaks down, or indeed there's some sort of problem with the communication links, then you're kind of left high and dry with no way of processing at all. You've got all your eggs in one basket, really. If you have a central computer shared between 2 people and 3 people and 4 people and 5 people and 6 people, everyone having to be serviced by the same fixed resource, then you can get degradation in service as more people log on. And finally, and actually quite important from a strategic point of view, the programs, not just the hardware, but the programs run in a centralized system tend to be determined centrally. And the budget is determined centrally. And this means that if you have a subsidiary or a branch which needs extra processing power, is convinced that a new type of programming, a new approach is going to be a really good strategy for them, they can't just go out and buy and install that locally. They have to kind of put themselves in a kind of funding queue at head office and get approval in head office. So it can be quite inflexible because of the dead hand of head office, if you like, restricting what subsidiaries can do, even if the subsidiaries think it's very good. Decentralized or distributed processing, each user has local processing power. Advantages, resilience. If one machine breaks down, it normally doesn't affect all of the other ones. It's easy to expand as the organization grows. You simply kind of plug in more resources, more computers. You're increasing the processing power by acquiring more. Flexibility. Each user has or can be given the power to decide what sort of software they should be running on their computers. We'll see later there could be disadvantages in that, but it allows quick, flexible responses maybe to what is required in a particular subsidiary. It's particularly useful where maybe we don't need centralized data, where you have really got separate sets of data for each of the subsidiaries. It allows those to be kind of independent rather than trying to have them centralized. Disadvantages, difficult to control. We now have maybe 6 places processing data. That's 6 places where information could be corrupted, information could be stolen, information could be lost. Or viruses could get in, or hackers could get in. So much easier in a centralized system where you can really lay down the law much more easily. If you're not careful, you get multiple versions of data. People maybe put stuff in at different times and so on. Employed, something simple as an employee getting married. One division updates their name or address. Another division hasn't updated their name and address. And so, are there 2 employees now, or are we talking about the same person? And potentially higher costs. You may need experts at each of the centres. You're now dealing with maybe 6 sets of programs, maybe just 1 set of software, and so on. There are hybrid systems, of course, quite trying to get the best of both worlds here. Some data processing is done centrally, some is on a distributed basis. So a lot of web browsing and word processing might be done centrally. There's no reason that if you're writing a letter, you have to be kind of communicating with Word for Windows in head office 50 miles away. Do that locally, print it out locally. But if the divisions are recording sales or recording cash receipts and so on, that's maybe something that needs to be centralized. Or if each of the branches is getting orders in and you need to organize production, then you need that to be centralized, and that will be something which will be suitable for holding at the central resource. 2 slightly tactical terms here: client server and peer-to-peer, and a third one, the cloud here. What you have in a client server, for example on a local area network, is you've got one powerful computer, particularly it has a lot of storage. And then you have other computers attached to it, they have their processing power. But what they can do is they can download data from the centralized client server. The server, the disk server, the file server, serves the clients, the individual computers which each member of staff might have. So services provided, file storage. Sometimes you have a print server, you've got one, printing's fairly rare. There's no point in every computer having a printer attached to it, so that will be going through to one centralized kind of printer there. And also the sending and receiving emails is going to go through a kind of central sorting office almost that'll be held centrally. But there's definitely the big computer, the powerful one, the server, serving the little ones, the clients. In peer-to-peer, you don't have that ranking of the computers. They are a number of computers connected, but they're all kind of equal. And this is in a way a very simple local networking system. So let's say with simply 2 computers, I have one, my colleague has another. They are going to be connected, but I can be given access to some of my colleagues' files, and similarly back like that. So we can share information if we want to, or we can keep individual files separate if we want that. But again, there's a kind of issue, some data is here, some data is here. Are we sure we're backing up all the data? Is all the data safe from interference and so on? But it's very, very simple to set those up in small systems. And finally, there is cloud computing. Cloud computing is increasingly popular. The idea is that you have a very large computer sitting somewhere, probably the cloud, and you have all the users around the place essentially connected really over the internet. And if I want to do something on a spreadsheet, I won't have my copy of Excel on my computer. What I'm essentially doing is that I am communicating. I see on my screen a copy of the Excel spreadsheet, but my screen's only displaying it. Where it actually is in this centralized computer. And where I actually store it is in this centralized computer. Now this has got, again, a lot of advantages. Obviously there can be file sharing. Whatever computer I log on to, I can see this spreadsheet. I only need one copy of Excel, although licensing means you probably have to pay for more than just one. But having one copy of Excel means that if it's updated by Microsoft, you only have to update it in one place. Everybody's using the same version of Excel. It means the data is centralized and safe. This centralized computer, that people will be conscious, if you like. It's very, very important. They'll be having backups of it, and so on. So we have cloud computing. It does greatly reduce the costs of software and the costs of hardware. It gives you basically this impression that you are dealing locally with programming and files, but in fact you're actually communicating to something that could be thousands of miles away, where the real processing takes place. Finally in this, we begin to look at IT risks. If you have all your accounting and all your sales information, all your inventory information on a computer, then we know that obviously we're vulnerable to losing it. There are well publicized cases, for example, even a company as well regulated as Amazon, where customer credit card details, I think, escaped, and everyone was warned to change their PIN numbers and so on. So many risks associated with IT, and we should be countering those to really safeguard our organization. So we have obviously inaccurate processing. Somebody types in the wrong amount, and we've seen examples of that where you get silly airfares, fly from London to New York for $1, and again it was a great scramble to try to get these mistake fares before they are spotted. Although most airlines say it was a mistake, we're not going to honour it. Once data gets into the computer, of course, it tends to take a life of its own. It tends to be processed, however ridiculous it is, until the final outcome. It can be unauthorized access to data, simply people wanting to read the data. Unauthorized data, maybe to somebody's salary, for example, could be extremely embarrassing. Multiple users accessing a common database, and each user changes it. You almost have a kind of an example of that in Wikipedia. The entries in Wikipedia can be changed by many users of Wikipedia, and we're never quite sure who's made a change. The idea of people whitewashing their own records and building up their experience and so on so they look better is maybe an example of a danger of allowing too many people access to the same piece of information. The IT personnel themselves, the people working in the IT department, of course they've got a lot of expertise, and we don't want them potentially having access to confidential information, maybe the plans of the new products. Somebody in IT downloads the plans of new products, sells it to a competitor. It's not good for your strategy. Unauthorized changes to data in master files. Somebody puts through their own payroll increase. Or somebody or mistakenly maybe puts through a change in a selling price, but it hasn't been authorized. Or somebody changes a program in an unauthorized way, But 5 years ago, one of our large banks put through a change to one of its programs. It was a routine update change, but there was a flaw in the change, and the bank was paralyzed for about a week. Nobody could find, either on the internet, they couldn't find their balances, they couldn't get money out of the automatic machines in the wall. It simply didn't work for about a week on a major clearing bank. And maybe it was because the change hadn't been properly checked and authorized. Failures to make changes. So the government changes the tax rate or the tax rules, and you don't change your software, and so you begin producing invoices which are in a way illegal. It's not great. And of course, potential loss or inability to access data could just be a physical breakdown of the machine. The disk stopped working, or it could be damage to the machine in some way. And again, you simply can't get to this vitally important data that you need to have access to carry on your business. Now, what sort of controls are there? And first, there are really two sets of controls. There's IT general controls. This is like the controls over the computer environment. So the sort of controls that we need here are controls over the data center network operations. So no matter what program is being run, we want to make sure that just physically really, let's say the file server or the computer in the cloud is safe. You want to make sure that your network operations, that you've got the right protocols in there to encrypt and decrypt the data that would detect any sort of interference with the data. So it doesn't matter what application is being run, you need that for all of them. You need some sort of control to ensure that you buy the right software. So system software acquisition, we're talking about systems here, we're talking about, do we want to update Windows? Do we think the new version of Windows is worth updating? If we do update it, what are the implications for all the application programs? Will it all run on Windows 8 or Windows 10 or whatever the next one's going to be, and so on? We need to be careful about changing, maintaining it. Do we want to put it through all the automatic updates that say emanate out of Microsoft? There's also application system acquisition. We need programs, let's say an inventory program. This is an application system. System software is like the operating system. Application systems software is what does the work, if you like. So we have an inventory program. If we're going to buy a new one, we have to make sure it does the right stuff. Will it allow us to keep the volume of inventory? Will it allow us to put in reorder levels? Will it allow us to keep sales histories of the inventory? Will it allow us maybe to keep the age of the inventory? All the maybe very specific requirements that we might have for a particular sort of inventory. Will the software actually do it? And if we put through development, maintain that software, we change the software again, you have to be really careful to control the changes being put through. If you allow changes to be put through without proper checking, great damage can be done. And finally, access security, access to the files. You don't want people to be able to copy vital sales data onto one of these little pen drives and maybe kind of take it out of the building and maybe sell it to a rival, something like that. There are legal obligations over confidentiality that have to be enforced. The application controls, these are manual or automated processes dealing with application programs, wages, receivables, payables, inventory, non-current assets, and so on. We want to try to ensure that all transactions are authorized, they're processed completely, and they're processed accurately. Sorts of controls we have would be edit checks on input data. Let's see a couple of examples of edit checks on input data. But you can have something called a range check. So what happens in a range check is that you only allow data within a certain range. So if you know that people are putting in timesheets, then there is people are working a five day week. Then you could say, right, I never expect anyone to work more than 15 hours a day on 5 days. I will not allow any timesheets to go in with hours greater than 75. And it's going to reject those. You can have dependency checks. So we've all kind of seen dependency checks. I'm sure you've all tried to book maybe stay in a hotel or some sort of travel arrangement, and you put in your dates of going out and coming back, and it comes back and says that maybe your travelling out date is after your coming back date because you got mixed up in the month or you haven't updated it. Nothing wrong with either dates independently, but you obviously can't come back before you go out. That's a dependency check. There are things called check digits. A check digit is a number, an account number, a part number, an employee number, which is kind of specially constructed so that it conforms with certain arithmetic rules. So you make all your account numbers, for example, evenly divisible maybe by the number 13. And if it's not evenly divisible by the number 13, it must be wrong. And of course, the chances of putting in a wrong number, which is evenly divisible by 13, is pretty small. Check digits are more sophisticated than that, but they can very quickly detect wrong numbers. And we've probably seen that when maybe putting in a credit card number, those 16 digits, it immediately comes back and says it's not valid. It hasn't consulted your bank, it just knows by the shape of the number that it's not right. All of these deal with helping with accuracy. Sequence checks helps you with completeness. Think of a checkbook. Checkbook, all the checks have a numerical sequential number on them, and you can set up systems that will prevent you posting the same check twice, and it will be able to print out at the end of the month missing check numbers. So a sequence check is used on accountable documents. Another example is drop-down menus. So maybe you have got 3 ways in which you can get goods supplied to you. 3 methods of distribution: ordinary post, special post, or special delivery kind of thing. And what it does is, instead of you having to type in post or special delivery where you could easily get it wrong, a little drop-down menu, and you say, right, I want post or special delivery, or you press little radio buttons on it, so that there's no chance of you putting in wrong information. And then we have batch total checks. So if, for example, you're going to be processing 3 invoices, an invoice has got 10, 15, and let's say 13 on them. Those are our 3 invoices. What you do is you add those up. I've got 28 with 38 here, like a control total. So this is the batch total, and that will be input first. And then as you type in all the other invoices, all the other transactions, the machine is adding them up. And if the totals don't reconcile, you've done something wrong. Typed in the wrong number or turned 2 pages over at once, whatever it is, but something has gone amiss on that. And we have to, we have detected what the error is, and now we have to try to correct it.